All right, let's get right into it. We are seeing a massive shift happening in the cybersecurity space. A huge amount of capital is moving, and it's creating this stark dividing line, a real separation between the companies that are set to win and those that are being left behind. This isn't just some minor adjustment. It's a complete reevaluation of what a successful cybersecurity company even looks like.
We're calling this the Great Bifurcation. You know, for years, the whole game was just growth at all costs. Just grow the top line no matter what. Well, that era is officially over. So why the big change? It's pretty simple, really. Interest rates are higher, and investors are just flat out tired of pouring money into companies that aren't profitable. The party's over. Today, capital demands proof. Investors are done funding promises, they're backing proven, efficient performance, and a clear path to making real money. So that old model, chasing revenue at any price, it's out. The new framework, the one that all the sophisticated investors are using, is something called the Rule of 40. It's a much more mature way of looking at these businesses because it balances that shiny revenue growth number with free cash flow. You know, the actual cash the company has left over after running the business. This is the key metric now. It's how you figure out which of these companies are actually built to last.
Okay, so here's how we're going to break this all down. First, we'll talk about our new guiding metric. Then, we'll sort the key players into 3 distinct tiers: the anchors, the engines, and the ones facing some serious challenges. And we'll wrap it all up with a look ahead to what's coming in 2026.
So let's talk about our new North Star, the Rule of 40. It's simple, but it's incredibly powerful. You just take a company's revenue growth percentage for the year and you add its free cash flow margin percentage. If that number is 40 or higher, you're looking at an elite, healthy, efficient software business. This is the yardstick. This is what's going to define the winners and losers through 2026.
And wow, look at this. This chart shows you the bifurcation in plain sight. It's not subtle. When you look at the Cyber 6, the performance gap is just enormous. Way up at the top, you have Zscaler with a phenomenal score of 78. Then you look all the way down to the bottom, and you see SentinelOne struggling at 29. Just take a second and look at that spread. The difference is absolutely staggering. This is the new battleground, and the scores are up on the board.
This brings us to Tier 1, the platform anchors. We're talking about CrowdStrike and Palo Alto Networks. These are the foundational companies, the ones you build a serious cybersecurity portfolio around. Why? Because as customers look to consolidate all their different security tools, these are the platforms they're consolidating to. They're winning the platform war, hands down.
First up, CrowdStrike. They are the undisputed apex predator of cloud-native security. End of story. This company has been incredibly resilient, just consistently shrugging off whatever volatility the broader market throws at it. It's the bellwether. It's the standard that everybody else in the space is measured against.
And the numbers, they absolutely prove it. A Rule of 40 score of 46, and look how beautifully balanced that is. 22% revenue growth and a 24% free cash flow margin. This is why the stock commands a premium valuation. They aren't just growing, they're growing while minting a ton of cash. That's the sign of a truly high-quality company.
And they are not sitting still. Their recent acquisitions are a strategic masterclass. By buying SGNL, they've locked down identity security, which is critical because, as they say, attackers don't hack in anymore, they log in. Then, with Seraphic, they've basically said the browser is the new endpoint, extending their protection to where people actually work. It's a brilliant pincer movement on the 2 biggest vulnerabilities an enterprise has.
But you want to know the best part? They had an insider try to steal data, and their own platform caught the person in real time. Now, you might see that as a scandal, but the market saw it as the ultimate product demo. The thinking was, if you can catch a rogue admin, which is the hardest threat to find, then you can catch anything. It was incredible validation.
The other anchor in this top tier is Palo Alto Networks, the great platform aggregator. Their strategy is just ruthless consolidation. They look at the fragmented market and are basically absorbing it under their 3 main pillars: network security, cloud security, and security operations. And they are aggressively using acquisitions to build out this massive platform.
And that strategy is clearly working. They've got an even stronger Rule of 40 score of 54. Now, the crucial insight here is that while their revenue growth might be a bit lower than others, their massive free cash flow margin proves they're absolute masters at moving their customers off physical hardware and onto high-value software subscriptions. They are a cash-generating machine.
Okay, let's move on to Tier 2. We're calling these the efficiency engines. This is where we find Zscaler and Cloudflare, companies that are still in hypergrowth mode but are doing it with truly elite operational skill.
So Zscaler is really in a league of its own.
It's the absolute darling of growth investors, and for good reason. Its financial model is just about as perfect as it gets. This company is a true juggernaut, completely redefining what's possible when you combine growth and profitability.
Just look at that number, 78. That's not a rule of 40 score, that's a rule of 78. I mean, combining 26% revenue growth with an astonishing 52% free cash flow margin, that's almost unheard of. It just shows you the incredible power and leverage you get with a pure cloud-native architecture.
Then there's Cloudflare. And Cloudflare is interesting because it's almost transcended being just a cybersecurity company. It's become a core utility for the internet, like part of the fundamental plumbing. They started by securing applications, but now, with their Workers AI platform, they're actually running the applications at the edge. This compute plus security bundle is a hugely powerful differentiator.
All right, and finally we get to Tier 3, the challenged plays. This is where we find Fortinet and SentinelOne. Both of these companies are facing some significant execution risks and, let's just say, a whole lot of market skepticism right now.
Fortinet finds itself in the middle of a severe crisis of trust. They had a critical vulnerability in their core product that basically allowed attackers to just waltz past authentication. For a security company, that is the cardinal sin. Your whole business is built on trust.
And here's what made it a full-blown crisis. Even when customers applied the patch, their devices were still being compromised. You have to understand, trust is the only currency in cybersecurity. When your fix doesn't work, that currency gets devalued, and it is incredibly hard to earn it back. And then we have SentinelOne. This is probably the most polarizing stock in the whole sector. The question everyone is asking is it a deep value play or is it a classic value trap? The strange thing is, the technology itself is consistently rated top tier, but the investment story has been damaged by management credibility issues and slowing growth.
This chart just says it all. This is the market's verdict. SentinelOne is trading at about 5 times sales. Its main competitor, CrowdStrike, is trading at over 15 times sales. That huge disconnect, it speaks volumes. It's telling you that the market simply doesn't have confidence in SentinelOne's ability to execute.
So where does all this lead us? Let's look ahead to 2026. We've navigated this great bifurcation, but what's the next big thing that's going to separate the winners from the losers? It's going to come down to a brand new requirement, a new gate that every security buyer is going to insist on.
And that leaves us with the critical question. For every investor and every corporate buyer out there, what is this new procurement gate for 2026? What is the new non-negotiable requirement that vendors are absolutely going to have to meet?
Here it is. This is the new mandate. First, you prioritize platforms with strong Rule of 40 economics. That's just table stakes now. Second, you have to verify their AI claims. It can't be marketing fluff. It has to be tangible, governed AI, backed by things like an ISO certification. And finally, you avoid legacy hardware and any vendor who has proven they can't even patch their own systems effectively. AI governance is the new standard, and that market signal is crystal clear.